So, welcome once more. Um, my name is Nana Obin Alexander. I'm going to be your host for this training. And then if you have questions, if you have any questions pertaining to this or any other Forex related thing, or maybe you have more questions concerning your account, you can also do well to ask, and a member of the staff would do well to attend to you on that. Important disclaimer: when it comes to trading the forex market or the financial market as a whole, there are risks involved, so you want to ensure that you understand the risk and then trade with leverage capital, not borrowed capital. And this is very, very important, and that is why we're teaching you how to be able to manage these risks and be able to trade the forex market profitably, because this is a skill set that can be learned and unlearned. So what we'll be covering today is basically on support and resistance, but in order to really explain that point, it will be important for me to kind of explain trends. So, market trends, different types of market trends. And then we'll look at how we can use support and resistance in these cases. And then we'll see how we can draw support and resistance properly. We'll also look at how we can trade support and resistance. And then finally, we'll look at some examples on the charts and see if we can spot one or two trading opportunities at the moment. So before we begin, if you want to, I have some people who, if you want to fund your account, because I think also some people having issues with that. If you want to fund your account, just log into your dashboard. So once you log into just go to Engine or Germany Capital Market, and what you want to do is just go to login, right? So you go to login, login with your username and password, or your email and your password. And once you do that, you would see, okay, let this load too. So I have an account signed in here just to show you this. So once you log into your dashboard, you see something looking a little bit like this, although this account is quite different. So what you want to do is just go to deposit. So click on deposit, and when you click on deposit, you'll see options to make payments. So what you want to select is local bank transfer. So click on local bank transfer, and then select the MT4 you want to fund. You should probably have one. Then put in the amount. So say, for example, you want to fund $1,000, put $1,000, click away, and it will show you the Naira equivalent of that. So currently, this is what you need to pay to fund $1,000, 473. And so once you do that, you have to pay to this account now. So just pay to the Zenith Bank account. This is the account number, GMC Nigeria Limited, and your account will be credited. So you need to upload a bank statement, upload the proof of deposit. So the screenshot of the transfer, upload it here and here, and then in your remark here, you want to put your MT4 account number and then click on upload, and that is that. Because I'm not going to spend any further time there, let us go to the business of the day, which is on trend lines. Now, trend lines is a very powerful tool in forex market, and this is because the market is always trending, right? The forex market is never stagnated. The market is always moving. Now, because of this, the market tends to, go from one trend to another, and we need to be able to spot these trends. And trend line help us identify what trend we are and what we should be looking to do. So there are three basic main types of trends. So the market is either in an uptrend, or the market is in a downtrend, or the market is in a sideways trend. So the market is either in an uptrend, right, where it is making higher highs and higher lows, right, or the market is in a downtrend, where it is making lower lows and lower highs, or the market is moving from side to side. So an uptrend would look something like this. So we have the market moving in an upward momentum, making higher highs and higher lows. So if you notice, you see that the market keeps making these lows which are higher than the previous, right? And the highs which are also higher than the previous. So you can spot all these highs. Uh, so this is an uptrend, the market in an uptrend, right? So this is the market in an uptrend. The opposite would be for a downtrend where you see the market making lower lows and lower highs. So a market that is in an uptrend can now eventually, start moving from side to side for a while before eventually, moving lower and making lower lows and lower highs. So what you see here is the market is transitioning. So in this phase, the market went from an uptrend, right, to a sideways trend and now to a downtrend. And that is what you will notice in the chart. The market never moves up forever or move down forever or stay in a range forever. So it keeps moving in this range. Now, the way we use trend line to trade is it helps. So the market tends to form, swing lows, which we can connect together and look for trading opportunities. So what I mean is, if we have this market at this stage, if we try and connect the low prices in an uptrend, right, we would have areas where the market bounced up. So just like in the previous class, yesterday's class where we talked of support and resistance, trend lines are actually support and resistance, right? The only difference is why support and resistance are horizontal lines, trend lines are diagonal lines. Support and resistance are diagonal, horizontal, white trend lines are diagonal. Now, when I go to the chart, you would see this a little bit clearer. But this points it out. This is just the way it is. So what you need to do is be able to identify the trend. So what the trend line does is help you identify the trends the market is in. And once you've done that, right, this is simple. Anybody can do it. You can do it. So once you identify the trend, market direction, you can now start looking for opportunities to enter a trade. So what we have is the market is moving, up in an uptrend, and we want to be trading. I want to be buying an uptrend market. So if the market is heading higher, we are better off looking for opportunities to buy. So in this case, these low prices here would offer buying opportunities, right? Low prices here would offer buying opportunities, and then in a downtrend, when the market is moving down, these high prices here would offer selling opportunities. Now, forgive my drawing, but I hope you're getting the point. So this is the way the forex markets move. The forex market, what you see in the forex market is not chaotic. Everything you see in the forex market is actually structured, right? And as forex traders, our job is to actually make sense in the chaos. Try and see this pattern of structure in the chaos in order to make sense of the market's movements. So as traders, we make money if we are able to look for significant areas or level of potential support to buy, level of potential resistance to sell, where we can have high risk and minimal risk and high rewards on our trades, because you want to look for low prices to buy. So if you're in a business, you want to be looking for low prices so you can be buying the market, or you want to be looking for high prices so you can sell and then make profits. Now, this is a classic example of a horizontal support and resistance. So what we have here is we have, the market make this area, you can see how it serves as resistance, while you have this area serving as support. So whenever we see price, coming back to this area, we could be looking for potential for the resistance to hold. And if the price gives us a clue of resistance holding, we start looking to sell the market back down to support and make profits. In a similar case, if we have price, come back to support. So in this case, we have price come back to support. We look for potential support to hold, for this same support level to hold. And if it holds and we have price action turning higher, we could now start looking for buying opportunities to trade back to resistance. Now, trend line, kind of works in similar fashion. So, if I would use this example in this case, this is not, I don't know if you'd see what I'm trying to draw, But if I draw on my screen here, let me use this, right? So you could see that the market makes in this case where the market is heading higher, right? Here the market is heading higher. As you can see it's making lower lows, right? Sorry, higher lows and higher highs. So the market is in an uptrend, making higher lows and higher highs. So in a market that is an uptrend, what we are looking for is looking for opportunities to buy the market, right? So looking for opportunities to buy the market. So imagine if you had bought here, you'd have made a lot of pips. So this would probably be around 200, 300 pips because it's the 4-hour chart. Same thing here. This might be around 350 pips, which you would have been able to trade successfully because you've been able to identify area of potential or area of high probability where the market is likely to move or react to. So it's all about spotting market structure. So once we're able to spot the structure of the market, then we can now start looking to take advantage of this structure. So first thing, when it comes to drawing trend lines, you need to identify. So in an uptrend, right? So let me get the white. This in an uptrend is a market that is making higher highs and higher lows, right? So the market is moving higher, making higher lows and higher highs. So in an uptrend, if we are looking to draw our trend line, we are connecting the bottom, right? The low prices. So what you want to do is once you have low prices, you want to connect two low prices, right? So okay, let me do this. So once you have price, do something like this, right? So we have a low price here. We have another low price here. What we can then do is use our diagonal line to draw our trend line. So just connect the dots. So what you want to do is connect the low prices. Okay, forgive my drawing. So you want to connect the low prices. Now the reason we're doing this is because what has happened in the past is just history and we can't make money off that. What we need to do is be able to figure out what will happen in the future. And so once we have two low prices and the market has made see you can see that this low is lower than this low. That means this low is higher than this. And then you can see the market has made a new high, which is also higher than the previous one, right? So now once we've connected this low, what we need to do is wait to see what happens. So what could happen is price could go up, and then come back down towards support, trend line support. Now, once we see price around this area, we start watching for price action. We start looking to see what the market will do. Now, if we get a bullish movement, so if we get a rejection, right, this could now offer us opportunities to buy the market. Now, the good thing about using support and resistance or using trend line is because they give us a logical place to place our stop loss. So in this case, once we have market rejection of this area, we can start looking to buy, entering the market at this level. We can look to place our stop loss at this level, and then maybe look to target the previous highs, right? Or maybe use Fibonacci to calculate where our potential exit will be. So this will be our take profits, and this will be our stop loss. You can see that it gives us a good risk to reward ratio. So the idea is connecting at least two lows. So you need two lows. At least if you have multiple lows, fine. So let's say, for example, you're seeing the price at this point where the market has made this, you could connect the dots. And then when you see price, coming back down to this level, you could now start looking to see how the market reacts to this area. So if the market bounces off and makes a U-turn, you can start looking to buy the market, place your stop loss, place your targets, and look to trade the market back up. Now, nothing holds forever, like I keep saying. So what happens in some cases, and one of the powerful uses of trend line is it helps us to spot reversal. So by reversal, the market never goes up straight or comes down straight. So if the market never goes up straight or comes down straight, we need to be able to know when the market has changed trend from an uptrend to a downtrend. So And that's one way to know that is by using trend line. So you can see that this market is an uptrend, making higher highs, making higher highs, right, and higher lows, right. Now, when the market changes structure, or when the market changes structure and starts heading lower, or maybe moving from side to side, we'll get a trend line break. And on the different training, I'll probably cover trend line breaks and counter trend line tradings. But what happens, just like in the case of support and resistance, if the market breaks a trend line, right, we would likely see, a retest of that trend line, and then we could see a change in momentum. So in this area here, all through this region, we have buyers pushing price up. Now, when this trend line breaks, it changes the momentum and places the advantage in the hands of the sellers. And what could now happen is we could now see the price making lower highs, right, and lower lows. So once we see the market start making lower highs and lower lows, then we know that we are in a downtrend. And we are able to spot this early on and maybe look to trade it because if we understand trend lines. Once you've connected your dot, that's the beautiful thing. Price don't need to do any particular thing. You just need to wait to see how price reacts, and then you trade in the direction of price. So if we have a trend line break, you could look to, start trading in the opposite direction, place your stop loss here, and maybe target this low, right? If the market makes a U-turn and comes from here and bounces off, we could start looking to buy the market, place our stop loss below the swing low and look to target, the previous highs. And this is a powerful trading technique that we can use and that is very effective. Now, enough talk and drawing on the whiteboard. Let us go to the chart and see if the market actually does all of these things that I keep saying, right? Okay, now, and here's the thing. It works on every currency pair, every time frame. Whether you're looking at the 15-minute chart or the 1-hour chart or the daily chart or the weekly chart or the monthly chart, price action is price action, right? Now, true, on the higher time frame, the structure you see in the market, tends to be more substantial than on the lower time frame. But it doesn't mean it doesn't work. Now, so you're looking at the chart now, and this is a naked chart, meaning there's no, besides the moving average, there's nothing on the chart, right? So we learn support and resistance. So based on that, if you were in that class, you know that you want to, go to the higher time frame, maybe the weekly time frame, and draw your key levels, right? So draw your key levels. So, but I'm not going to draw any support and resistance, horizontal support and resistance in this case. What I'll be looking to do is to spot trend line. So now, mere looking at the charts, using your eyes, you could see that price. You probably wouldn't be able to notice price structure or price direction in terms of whether it's making higher highs or higher lows. So let me make this thicker so I can draw better. So you can see that this market is heading higher, right? See, market is heading higher in this phase where it is making higher highs, right, and higher lows, higher highs and higher lows, right? I don't know if you could see that clearly. But the market is making higher highs and higher lows. So let me use something. The market is, sorry about that, making higher highs and higher lows, right? Now, that is a market in an uptrend. A sideways trend is where the market is moving from side to side, not really making much move, not going very far, and not making much move. Now, I just pulled up any currency pair. It work on every currency pair, commodities, cryptos, stock markets. As long as it's priced over time, you could apply this same concept. So you need to spot market direction, connect the lows in an uptrend, and then connect the highs in a downtrend. Now, this market is in an uptrend. I say it's in an uptrend because you can see that the market has been moving higher, right? You could see the market has been moving higher and making this move higher. So what we want to do in terms of trend line is let's connect the dots. So if you're using MT4 on your phones or your laptop, you would see a trend line too, So somewhere at the top, you see a trend line, so it looks something like this. What you want to do is just click on it, right? And then connect the lows. So in this case, uh, this would be a trend line, right? So if I draw this now, this would be a trend line. And then what I could look to do now, you could have higher outer trend lines and then inner trend lines. So what I could look to do, I'll be looking for now is to see how price reacts. So the next time we see price around this area, that would definitely offer solid trading opportunity. So if you see price we come back towards this area, you could have price would have a good trading opportunity to take, right? And you could also spot, during this period where we have the market moving, you could have seen this. So where we had this trend line, okay, yeah. So where we had the market moving higher, uh, and then we could have looked to trade this, right? Now, this example is not as clean as I would like, and not as clean or as I would have liked to use as an example. So let me try and use something else, but it's still the same concept. I just want you to be able um, to see the trend line in action much more. So this is USD JPY, the trade I've been looking at and I've been trading for a while. So if you look at this market, okay, I have some horizontal levels here, right? Let's take off some of them so we can see more on the chart. So you look at this chart and you can see during this area, so this period where we have you could see this area and you could see that within this period price has been in a downtrend, right? You could see how price has been making lower lows and lower highs, right? Now you might be looking, where is the trading opportunity here? But if you understand trend line, you would have been able to connect. So once we have this low, so first of all, you'd have something. Okay, that's so we'd have something like this. Now, you can see this is a downward trend, right? A bearish trend. The market is in a bearish mode. You can see how the market is making lower lows. You see this low, this one is lower than this, lower lows, and then it's also making lower highs. You can see each high is lower than the preceding one. But notice how the market, after this trend, you can notice how the market keeps coming back to this area. Now, just like horizontal supports and resistance, trend line is also like a zone. So you want to consider trend line like a zone. So it's not an exact number, more like a zone, right? So you could see whenever price come back toward this area, you see how price reacted. So we have the market fall and then rally back up, comes back to this zone, and we see price drop. Our price drop, again we see price come back. So when we see this movement and we've seen these two touches, we'll draw our trend line. The next time we see price come back to this area, then we'll be looking to would have been looking to trade the market, right? We'll be looking to trade the market. So let's play this. So let's say we've had our first touch and then our second touch. So let's do this, right? So this is the market. We've drawn our trend lines. I want to see what happens. So we are in a waiting stage. Okay, not here. Let me go forward a little. Um, okay, so we are in a waiting stage and we want to play and see what the market does. And so we have the market, coming down, right? Successful trading is usually about waiting. So now let's see what happens. The market comes, right? So let me pause this. The market comes, touch that same area or trend line and start heading lower. So this would have given us an opportunity to sell, would have placed our stop loss. So in this trade here, would have looked to take a short position, maybe from this area, right? and then place our stop loss just above the highs, and then let's say probably target the swing low. So you could target the swing low, or you could target one of these lows. So let's say we target this swing low here, and let's see what price does. So we proceed and see how price react around this area. And price is moving within the trend line. So why, as long as price is respecting this trend line, the price will always head lower. And then we see we have our full TP is hit, right? The market hit our TP. We found support on this area. So if you understand the basic concept of support and resistance, you probably would have been looking to trade this support based on this price action and see how price is heading higher. Now we want to see what price does. As long as price keeps respecting this trend line, we'll keep looking to trade in the direction of momentum. So price keeps doing its thing. Remember, you don't have control over price. We just want to be able to trade what follow more like flow with the waves. And you see again, market comes back up. This is no fluke. Comes back up to our trend line and then found resistance, rejects it. So in this case now, we'd also look to take a short trade. So after this big bearish candle, market closes, would look to place our stop loss above here, and let's say target here, and let's see what happens and see how the market moves in our favor. And so this trading system, you can see how it's RTP. This trading system just enables you to be able to make calculated decision, remove the emotion, and just trade based on structure. Now, as you get better, as we learn other techniques or other useful tips, you'll be able to merge them and be more proficient in using this. But being able to understand key areas, what trend line, what support and resistance and trend line help you do in general, it just help you to identify key areas where we could see potential to buy low or to sell high. So you can see how this trend line in this downward channel offers us the potential to sell high at a high price with minimal risk and higher reward. And then in an uptrend, I'll look for an uptrend channel. So in an uptrend, it will offer us the opportunity to buy low and also sell high. Now, just like I was mentioning earlier, the market never stays in a trend forever. So if I keep playing this, whenever a trend line is broken, we usually tend to see the market at least, reject, move in the opposite direction. You can see how the market comes back to the trend line, and we see how the market falls up again. So anytime buyers push price up to this level, sellers come out to defend this level. So this would have given us solid opportunity to buy the market. But nothing goes on forever. And then for experienced trader, in this particular case, we see how the market comes back to this trend line and rejects it. What we are expecting, or what we should be expecting, is to see price make a new low. Remember, in a downtrend, we want to see the market making making lower lows and lower highs, right? In a downtrend, don't see the market making lower lows and lower highs. But in this case, the market has found resistance here. Naturally, would expect the market to make a new lower low price. But you could see here, market is struggling to make low prices, and let's see what happens. So this is something we call break of structure. Okay, in this case, it makes a low price. We want to see the market come back up toward this area and see what the market does. If the market comes back to the trend line, and see if it offers us opportunity to trade the market. Now, it's more, you could price is coming back up, goes to trend line, rejects it again, right? This would have been looking to probably trade this, sell here, place our stop loss above here, at least look to target this low prices here. But now market is just, okay, let me pause here. Now in this case, you see how the market is just, anytime price has come back to this trend line area, there is a strong rejection. So we have price come here, strong rejection. Price comes here, strong rejection, and after the rejection, it is followed by a strong fall. Comes here, strong rejection, strong fall. Same thing here, same thing here. In this case, we have the market comes here, we have strong rejection. We should be looking to see the market fall off in the same direction. But what we see is, we see buyers keep on holding price. And then what we have is, we now have price, push back up. And then we have this close above the trend line. Now, the market has been in a downtrend. Once we have a break of the trend line, in most cases, we'll have the market become an uptrend. And this is what we are seeing here. The market has broken the trend line. And then you can see this is a low price. This was the high price. In the downtrend, we're supposed to expect a new low price. But now the market made a high price, made a low price that is higher than the previous one, which is the sign of a bullish market. You can see that this low is higher than this one, which is opposed to what we have here. Then the market made a new high price, which is also higher than the previous one. So this means trend has changed. And then we see the market do this. Now, I'm going to post this here again. Remember I said once we have two prices, two low prices or two high prices, depending on if it's an uptrend or downtrend, we can draw a trend line. So in this case, we would have drawn a trend line from here, connect these low prices, right? And this is what we have. And then you can now see what the market is doing. The market came back around this region and went back up, and now it has made a new high price. So what we'll be looking for now is if we see the price come back down towards this area, if this trend line holds, we'll see the market make a new higher price. As long as this trend line keeps holding, the market will keep heading higher. If the trend line breaks, we could see the market move from side to side for a while, or we could see the market move lower. So this is how we use the trend line. This is how you trade trend lines, and it is very, very powerful to enable you spot key areas in the market where you could look to sell high and to buy low. And this is very, if you're going to be a successful technical trader, at least you need to have a good understanding of trend line, of support and resistance in general. And this will go a long way in aiding your progress. So I know we've spoken a lot. I hope that the concept is clear, and it doesn't matter because I'm using it doesn't matter which currency pair I'm using. I could, if you want me to analyze any currency pair, I'll show you the same concept there. It's still the same thing. Okay, this is something I was looking at. You could see a trend line. I already had my trend line drawn here. In this case, you had price make this low price, make this also new low price here. Then you can see the next time price came back, we had this push. Price came back again, we had this push, came back again, we had this push. So this is a valid trend line. And as long as this trend line keeps holding, price will continue to stay above and make higher highs and higher lows. So we could have price come back down towards here and then see how the market reacts. If the market rejects this area, it could offer us good opportunities to start buying and good opportunities to trade. And you could have inner trend lines and outer trend lines, just like as I have in this case. So you could see here, right? Although this inner trend line did not really hold, but you could have a trend line within a trend line, which in many cases, when it market breaks an inner trend line, it probably would tend to progress towards the outer trend line. So if we have, let me see, we have a trend like this, this is a low price. So if the market does something like this, where it comes back down, right, make a low price. Let me make this thicker. So the market comes back down, makes a low price, head higher. Why is this? Okay. Let me use this. Okay, so we could have the market come back down, then break this trend line. Now what we'll tend to see is a retest, and then we'll see the market usually come back to the outer trend line, which would be in this case, right? So we could have, this is overdoing it. I hope you see what I was trying to do there. Where we have the price could come back down, head higher, break this trend line, retest it, and head towards this other trend line. So just being able to understand the concept right? You'd be able to spot opportunities. Sometimes you see the market heading higher or heading, imagine the market has been falling and you saw this and you say, oh, this is a good opportunity to sell because the market is falling. And next thing you see the market heading higher and you're wondering, who is following you, right? It's just because you don't understand that that is a key area or a key level where buyers and sellers are watching. And then when price gets to that area, these buyers come out to defend that level and put in more bid and push price higher. So this concept is very powerful, and if you can do your best to master and understand this, it will go a long way to aid your trading journey.